Lock it in. Lock it in. If I lock it in, I mean locking myself in. One thing I like to do is I like to take lion's mane and ashwagandha. These are supplements. I like to take those in the morning right before I start trading. Helps. Adds a little bit of extra focus. That and either a kickstart or V8 energy for a little bit of caffeine. Even though I don't really need it, I get enough sleep. I still like to use any advantage I can get. That's a good sign. But the mistake we made yesterday was we fucking got in before this candle closed and all of that. I need this. And just seeing one wick, just see it wick up once isn't enough. On it, like it needs, even if it's the same candle, I need to see it like do that multiple times. It could be on the same candle, it could be on multiple candles, but that's not enough. That's a good sign. But we still need to wait for it to close first. That is a rule, homie. No pressure and no FOMO. Calm, cool, and collected. And we have no fear of missing an opportunity either. If I don't feel comfortable, if I don't feel right taking the trade, I'm not gonna take it. Like with that, like this one candle right here, that's not enough. Because I didn't see the downward momentum enough as I would want to for me to get in that trade, even though I seen it wick up a little bit and then come back down. But I didn't see it even reject this enough either. So we'll see what happens on this candle. It still seems to be rejecting that. So that is a good sign. Gives me a little bit more confirmation, but we're still watching. That's a good sign. So far, I like what I'm seeing for this entry opportunity. But right now, it still looks like it's not so sure if it wants to go down, even though I'm seeing it reject that a little bit. See that? It's fighting it though. It's fighting it. That's a good sign. It is fighting. So one thing that I think I'm coming to learn about this opening strategy is at the opening, when price does this and it's fighting against the level on a retest, it is really fighting to determine, like, all right, early morning, which direction are we gonna go? So it really likes, sometimes it really likes to fight that first level, but whichever side wins is typically during a good price action day. That's where direction is headed early in the morning. I'm actually gonna get in, put my stop right here. I like what I seen there with the price action and the wicking. So my stop will be right there. Stop loss. And we are in the game. EA Sports. If it goes beyond that swing high, this new swing high right here, as far as I'm concerned, that means it has no momentum to the downside, and it could either it could either consolidate or move up against me. So that's a good spot to have my stop loss. And now is really in the heart of the cards. We made a good entry, and that is my job. The next part of my job is trade management. Would love to see it go past this level that this candle created. If it does that, I'm a little bit more certain of it going to the downside. It's looking good so far, though. It's looking very good. Very, very good. Now, the rest of this is trade management. Making sure I don't get out too soon. And that I get out based off of what's part of my trading strategy, which will be trailing my stop as price goes down. Where it makes sense, trailing it. And at some point, I'm going to use, the further it goes down, I'm going to use the 9 EMA as a trailing stop, which is this purple line. So patience, it looks like it's having like a fight right here. It's consolidating right here. It could go either way. But there's a reason I placed my stop right there. If it closes past that, then we're done. But yeah, it's too early to get out. This is the part that is trade management. This is the part where you need to have patience. Don't feel pressured. Like this isn't enough for me to be like, oh, price has no momentum, let me get out. Like, no, let's just be patient. Because you see it keeps wicking up. You know what I'm saying? And then getting pushed back down on all many of these candles. Every single candle really has done that. So, in my opinion, it's still more pressure to the downside than there is to the upside. Little more past my stop, because it closed on my stop. Yeah. So if it goes back up past, if it goes up to this level and actually goes any kind of past that, I'm out. I feel like that'd be a fair exit. Out. So I am out of the trade. This could be just part of the shitty price action, because in my back testing and live trading, usually when it does that, there's a lot more pressure in the direction where I'm seeing it wick up and then come back down a lot like that. Usually that means it's going to the downside, but when I don't know, it seems to be very indecisive. As far as my entry, we made a great entry. There was nothing wrong with my entry. There was nothing wrong with my stop and where I decided to get out at. That was a clean trade. It's just that price action hasn't really been the best for one. That's like the big thing, in my opinion. Also, it seems to have been fighting against this level. So it was like, it seems to have been caught up between like the previous day low, fighting that, as well as the this resistance. It seems like it had resistance right here. Whether it's due to that or not, it seemed like it was fighting against something. So I'm thinking it might have been this level. Because it had like this kind of zone of resistance right here that I had to fight against. But if it would have broke through that, it would have been like pretty much a straight shot to the pre-market low level. But yep, I didn't. That was a good entry. So I like when I have good entries and I know I ain't fuck up my strategy or anything like that, I don't ever feel I don't ever feel discouraged even when I make mistakes. But when I make mistakes, it's like, okay, that was 100% on me, and that there's something to learn from. There's sometimes something to learn from when you make a correct trade as well. But yeah, in this case, we made a good entry and we made a good exit. We had my stop place where it was supposed to be. The discipline was there. Everything was there. I'm not gonna chop this up quite yet as bad price action, but the way price action has been acting all week, this is par for the course of the bad price action. Yeah, once I get in a trade, win or loss, I don't get in any more trades that day. Like I'm a one trade a day guy. And besides, whatever trade I take in the morning, usually it takes a long time, like hours, for another opportunity to pop up anyways, usually with the levels that I like to take. So, you know, and then on top of that, you'd be competing with whatever new levels has been created for today as well. That has already been made between whatever trade I took early in the morning versus later. You know, you'd have more levels to have to contend with and resistance and all that to pay attention to is and fight against and all of that. It becomes a little bit more messier later on. Plus, it's less volatile, less volatility later in the day as well, generally speaking. So, but yeah, I chop this shit up as shitty price action. Like this is to me, this is shaping up to be another day of shitty price action. Like as if you just look at what the hell is going on, it definitely looked to me like it was going to the downside. It even had a it looked like what was turned out to be a failed retest for a while, but then it just fucking made a U-turn, almost looking kind of like out the blue. But like I said, this seems like a level of resistance here. But yeah, it just fucking did that U-turn and did that, and now it's like shit. I don't know what the hell it's doing. Came up here, stopped, even though it doesn't seem to be any resistance until like you get to these levels right here. Yeah, this is all indicative of like a bad price. It's still a little too early to tell. It's only been like 20 minutes since from open, but it's kind of shitty to me. Kind of shitty. And then you just see like these wicks, man, just up and down, up and down. That's another indicator of bad price action. When you see price, like these candles just wicked having like hella wicks in like both directions and stuff. It's, you know, it just tells you that the market is indecisive at those points, and that's what it's pretty much has looked like this whole time. I don't know, maybe some would look at this as like a retracement, but it like retraced like all the way to open. So I don't know who would be looking at that as a retracement when it is not even like halfway or 75% or whatever you retracement guys that like to use Fibonacci and all that do, or even the guys that don't like using Fibonacci. Then just look at other levels, other things for retracement. It freaking went all the way back up to open. Now it's dropping. Yeah, there's no way in hell when I entered and seen this fail retest that my stop would be placed all the way up there. There's no fucking way. At least not with my strat. My strat, we have a tight stop. We have a tight stop. All the way up here, like, is nuts because we're trying to make a move with it. We're not really having the expectation as to how far price will go, but we're looking at the next level, like right here, next significant level, like right there, and being like, all right, we need to watch and see how it reacts to this level as to whether we're going to get out if it consolidates here or it seems like it's highly resistant to passing there. You know what I'm saying? So like I would have got in somewhere right here. My stop will be right there, and the take profit level will be right there. That'd be like a 1-to-1. But that's not how we trade. We take yeah, that's just not how I trade. I don't like having stops like way back there and all that shit. What seems to work for me is having tighter stops. Why? Because we're expecting the momentum, what like more immediate momentum to continue versus okay, momentum stops and retraces 100%. That is not momentum in my eyes. That is called bad price action as far as I'm concerned with my strategy. You know, retracement to about half of this trend down, like that's something else. But like 100% retracement, to me, that is no momentum. Now it looks like it has momentum, but there was no indication that it would have momentum from this point forward. There was nothing to tell you it was going to do that. Yeah, it went to open. You seen it resisting, breaking past the opening right here. It looked like with these wicks, and then it struggled right here. It got pushed back up, and then it dropped. Like I said, man, to me this is just bad price action. But to somebody else, this move right here, it worked for somebody. I don't know who, but it worked for somebody. Somebody's seen this as an opportunity. Like this right here. I can't tell you why it's doing this. Should be an easy just drop. There's nothing there as far as I'm concerned to stop it. There's no daily moving average. It's no gap level. It's nothing. It's like as far as I can tell, man, it's nothing but just a straight drop. It shouldn't be like maybe one candle like this where it's like wick down a little bit and then push back up. But to see a candle like this when there's nothing there, that is indicative of bad price action. This is bad price action. And when you compare it to the rest of the week and how it's been bad the rest of this week, today's Friday, it's been bad like this all week. Oh yeah, this is just a bad price action week through and through. But yeah, pretty much my day is done. The week is over. It is Friday. I will have a review tomorrow to review everything that I did this week. Um, I really only had one mistake that I made this week. I only made 2 trade entries this week. Today and yesterday, and yesterday was just a mistake. That was when I took a trade before the candle closed, and I was supposed to wait till the candle closed, and then it moved against me. So, but this trade I did the right thing. I did nothing wrong. Like right here, why is it doing this? Anyways, man. Yeah, I'm done for the day. It's nothing more. Like I said, I don't take trades after the first trade. Um, I don't know what happened here. There's no way that it was resistant because of that. Because look how it just blew past that all of a sudden there, and then got caught up right here for no fucking reason. Like I don't understand. You know, this should be an easy to the pre-market low. But whatever, whatever. The QQQ's doing it. It's getting there. But yeah, that's it. So one reason for the bad price action this week that I'm also just not thinking about, that I might have mentioned before in the previous video, is that we are currently, this is like the 3rd week of the Iran war. And so, you know, obviously you get these headlines that happen. And even on the days where there were no headlines and nothing seems to have been happening, people expect or are waiting for like news to come out of there. So you get bad price action when people are expecting and are waiting on the headlines, and then you also get bad price action when people are getting headlines. Because if it's bad headlines, okay, all of a sudden you could be having good price action for a bit, and then you might get something like this happen, or this big candle happen, just because of the headline. And then there could be another headline that comes out that reverses this move real quick and doesn't respect levels as much, because everything is super duper headline driven and headline awaiting and stuff like that. So that might be why we have bad price action this week, because we also had a lot of bad price action, if I remember correctly, last week as well. So it is what it is. I think we definitely had bad price. I know we had bad price action last week, because last week I made some mistakes, so I got in trades I wasn't supposed to get into. But last week, if barring that, there would be no trades I would have gotten to last week at all. I think I would have gotten to one trade last week. That was correct. But all last week was bad price action. Same with this week. It's just shitty. Like you see how this move is like no respecter of levels, but there was like no indicator on price action that was like, hey, it's going to make this move. You can say on the QQQ that this was a better looking retracement because it didn't go straight to open. It went up here and then it did this move. Well, how would you have known it was gonna do that? There's no level here to be like, all right, this is where it makes sense for the retracement to stop here. You can say this, but that's not a significant enough level for that, in my opinion. You could have risked it and just got in when it broke through this swing low. But with how bad price action has been, there's no way in hell I would have done that. And on the SPY, for me, I would consider this is breaking market structure, even though this is the swing high, because it went all the way back to open. I would say, for me personally, it broke market structure. It as far as I wouldn't have got in just because it went so far from this level. So I wouldn't have got in on that breakout of the last swing. This looks more reasonable. It doing this. But again, bad price action. There's no way I would have risked that. Because for me, on top of that, it has to be like one of these levels: a previous day low, the previous day high, the pre-market low and high. That would have had to been one of these levels right here and doing that for me to be like, okay, if it breaks back through here, we can enter. If it was my first trade and I ain't take a trade right here like I did already. So there is that. Just bad price action, bro. And like I said, this move is straight up headline. Cause I'm listening in my earphone right now, and I'm hearing the headline, and that's what that move was. And it had shit to do with price action. Yeah, so QQQ just looks more reasonable. Like, it looks like it was actually reacting to this previous day low and pre-market low right here. Compared to the SPY. Like, what the fuck is the SPY really reacting to? It looks like it was reacting. No, it definitely looks like it was reacting to this pre-market low. But it kind of also didn't respect it either. You know? This is a good move right here. This right here. It's a good move. But again, at least with my strategy, there would have been no indication like, hey, get in this trade. If I hadn't already taken a trade, which was a good trade, which was a good entry, by the way. There was nothing wrong with that entry. But let's say for some reason there was no trade opportunity up there. This would have been it doing this, and then seeing this wake up, seeing this fail. I might would have needed to see, because we're so far back here, and I only see this one. I need to see what would happen. During this candle. But if I would have seen that and then it broke through here, that would have been an entry. If it broke through here, I'd enter on the candle close that breaks through here. But maybe I wouldn't have, because I see this right here. This is heavy rejection. But even with that, yeah, I would have entered if it broke through here. But it doing all of this is like, dude, what the hell? This is not clean. And then like I said, on the SPY, it actually broke past here a little bit, and it's just not very highly respected in this level. It's playing around here like it is, that it ain't. I don't know, bro. Just weird price action. Uh, Seems to be it seems to have broke. Yeah, it broke that level. I don't know what's next because it'll be pretty far back. I could switch to the daily, but all right. So I just heard about why this move happened. It's because there was a headline about them deploying an additional, I believe, 1,000 Marines to Iran. That came out, and then that's when like this whole move happened. It has shit to do with price action. That's why it seemed like this happened with no reaction to a specific level. That's all this. This all this whole fucking thing was, man. So, what another? This is a whole nother thought and something to think about for myself. Should I be trading during headline heavy market, during a heavy headline market like this week and last week? You know, during this Iran war, should I be doing that? That's a question to answer for myself or contemplate on. And then the second thing is during a headline heavy market, when a headline like that comes out, that is something that I believe people are going to react heavily to, and it's obvious people are going to react heavily to. Whether I'm trading during the headline heavy market or not, should I be reacting to that kind of heavy headline news? And if so, how should I react to it? Those are two very good questions to ask myself and try to figure out and add to my strategy for sure. Because this is the first time using this current strategy that I've traded in a heavy headline market. All the back testing I've done, I think I haven't tested, like there was no like headline heavy like weeks. It might have been like a heavy headline couple of days or something, but like straight up weeks of this, I don't think I've ever tested for. I haven't live traded in, and I haven't tested for. So this is a good case. This would be a good case study right here for the heavy headline weeks. If it's a heavy headline day or two, that shouldn't matter. I think I'd still should be trading my regular trading strategy. But when it's a week, 2 weeks, 3 weeks of heavy headlines because we're in a war or something like on that level, yeah, maybe we need to consider doing something else, whether that's adding a rule or simply not trading during that time period, or coming up with a completely different strategy that only involves the headlines, like reactions to the headlines, or using the headlines somehow, so something to think about. And I'll definitely be contemplating that for the rest of the day and maybe this weekend. Maybe I'll add to my rule set. Maybe I won't do anything and I'll just decide to keep trading exactly how I'm trading, even during a market such as this, a very headline driven market. Because we're going to back test, because this is perfect to back test. We can back test for the past 3 weeks. I didn't trade. I wouldn't have traded much. I didn't trade much during this time period of headline heavy drift because there wasn't really great price action. I really only took, if I made no mistakes, I would have only took 2 trades between this week and last week. Only 2 trades. 1 trade this week and 1 trade last week. So even if I don't change anything, I don't think it'd be all that bad. Other than maybe missing opportunities to trade, but I don't think I'd necessarily like lose a lot, take a lot of losses, or lose a lot of money during the shitty price action because of headlines and all of that. So worst case scenario, I change nothing because my strategy still isn't bad, quote unquote, during a time period like this. It's just that there really wouldn't be any opportunities for me to trade. And I might lose a tad bit of money, but not a lot because I wouldn't really have any opportunities to trade to begin with. On the other hand, if I do add something, then we'll see. It might be something like, all right, during a headline heavy market, and it's been like that for a week, we're obviously like in something crazy like a war, which obviously isn't even going to happen often, so it might not even be worth trying to add something like this to a headline heavy market like this, because something this extended doesn't really this long doesn't happen often, so it's like, what's the point of even bothering trying to figure that out? Just simply either keep trading my strategy and not have to deal with it, take very small losses, not really having many opportunities to trade during that time period, or just not trade during that time period, and don't worry about it because this shit doesn't happen often. So we'll see. But what I was saying was, maybe if I do decide to add something, it'll be something like, okay, we just sit around the market. We don't use my current trading strategy. We use what would be considered a headline trading strategy. And that headline trading strategy could be something such as, all right, we don't do anything until a significant enough headline comes out from the morning onwards. So from the market open onwards. And we simply get in on breaks of swings. So like right here, when the news came out that they're sending 1,000 additional Marines to Iran, and then it made this move, we don't get in right when that headline drops. We don't do that. I don't think that'll be a good idea. I probably would work against me, maybe. Especially depending on the speed as to which I get the news. Usually, I'm not going to end up seeing that news until maybe, like, for instance, this third candle in, which is 2, 4, let's say 6 minutes later, 5 minutes later, I'm now getting the news compared to, like, the earliest people getting the news. So I might not have seen that until this candle, for instance, just for example, if the news were to come out right here. But the entry would be, so let's say the news came out right there. All right, so we're aware of this news somewhere between these two candles or the start of this candle-ish. So we see where the swing low is. We know it's bad news, and obviously people are reacting to it as bad news. We wait until price breaks this level. It's not a significant level, or it is a level, it looks like, but we're not really paying too much attention to, like, oh, is it a previous day low, pre-market low, previous day high? Like, that doesn't factor in as much in this trade. Like, we're just looking at, okay, what's the next swing low? Does it break past that, whatever the next resistance is, period? Whether it's this swing low, whether it's a previous day low, pre-market, whatever. What is holding, like, this previous day low seems to not matter because it broke through that. It really doesn't fucking matter. This matters now because it made that swing low, and it seems to be a point of potential resistance. It breaks through that. We get in on that breakthrough. It breaks through that, and maybe wait till it closes, not just break through. It needs to break through and close past that level, and then we get in. And then we put my stop. Wherever that swing was, we put it a little bit behind that. So it would have been like right here. And then we just simply, as price goes down, we do the whole, all right, trailing the stop thing, trailing the stop, and then depending on how far it gets, probably like once it gets to like right here or right there, that's might be when I start using the 9 EMA as a trailing stop, and it needs to close past that 9 EMA to be stopped out, which in this case, it would still be going. I still wouldn't have been stopped out. We'd be down here. And if we get stopped out right here, we would have made this whole move right here from freaking here to over here if it would have closed. That would have been a 186 tick move. Damn near freaking 0.30% move on the SPY. So something to think about right there during high headline heavy Newsweek news, new price action, I guess. So we're gonna test that out. I have all of this week and all of last week and maybe the week before, because that was the first week that Iran war started, to test that theory. The problem would be I somehow need to link the times of headlines. So that means I have a lot of headlines to have to go through and a lot of news to have to go through to determine when any significant news happened. So that would be the only shitty part about having to do that. But we can just look at where the big candles are, and then I could just, I don't know, man, go back on like Twitter or something, those news people I follow on Twitter, headline news people I follow on Twitter, and be like, oh, okay, 9:50 a.m. Let's see if there's any headlines that came out around 9:50 a.m. That's how I'm going to back test that.